Hello traders, Gary Wagner here, approximately 10:30 in Honolulu, 4:30 in New York on Tuesday, the first day of October 2013, and this is the daily report for gold and silver. Utter meltdown in the precious metals markets as the shutdown begins in the U.S. government. We'll talk about that in a second. We'll talk about repercussions. We'll talk about where we think this market is going. But first, current 1288, that is correct. Markets broke through substantially through $1,300 as it sits off almost $40 on the day, almost 3% lower. The low, 1281.70. We'll touch on that in a second, with a high 1338.70. And as I said, off about $40 on the day. Silver also fell out of bed. You can see this utter breakdown just below, call it about 2150, this band right in here. We'll talk about that in a second. Comes down, hits a low of 2057, and as you can see, is really sparked off of that. In fact, currently trading at 2112, but you can see on the 60-minute chart how these Henkin candles, the Japanese average candles, have gone green. Large size, large body size, but it is a thinner market, so we do want to definitely touch on that today. All of these topics will be discussed all on today's daily report. Now, we've absolutely seen a break to the downside. In order to make sense of really where the market found its low today, wanted to pull up, this is a two-day chart. I've got a couple of different fib retracements, but the key one that we want to look at right now is just of this most recent rally, 1181 up to 1435. Market comes down, 1278 is a 61% retracement. And you can see quite eloquently that that is kind of where the low rested. Our next real support level is going to be 1241. And 1241, of course, is a 76% retracement of this last move. Now, there really is no real support in the market if, in fact, we break through 78 up until about 1241. Now, 1278, 1280, that's a number we've talked about. We've talked about a number that we felt that the market had some really strong potential in going to, and we've absolutely seen the market touch down in this area today. Now, this analysis I'm about to do, of course, it's on a simply technical basis, has nothing to do with the fundamentals in the market, but I've converted our daily or two-day chart into a weekly chart. You can see that the market comes down. This is that 61%, 1278. When we take a look at this marketplace and the way that it traded, in between, call it 1330 and really 1183, there have only been a couple of areas in which we can see any kind of historical reference where we could find support or resistance. And the first thing that kind of pops out is this particular top right here. I'm going to carry that over and straighten it up as best I can. And what we'll see is that this top loosely, very loosely, corresponds with this bottom right in here. It's just below that. But again, when we look at this particular area, and I'm speaking about 1278, we then look at this particular top, which is probably around 1250, very loosely, that tends to match. But the other thing that really jumps out at me is when this market took off, it had almost a parabolic rise. On a weekly chart, you had this continuity of week after week after week in which the market had a higher close as opposed to the open, therefore a green candle, until it really finds some real resistance. This is up around 1400. It falls back down 1330, and we have these series of support level bottoms here. Now, that, of course, is now going to be our resistance. So real resistance in the market is going to be first 1300 and then 1330 on the top. And that's the best way for us to look at it. Now, to me, the key right now really isn't different resistance levels, because the pressure is definitely to the downside. And that's why I brought this chart back up. This is a chart we've looked at over the last week or so, in which we have defined the fact that we have seen a series of lower highs and a series of higher lows recently. Our range is compressing, excuse me, and we were looking for the market to break below this particular compression triangle. We also are on record that our belief is that, according to the theory that is, that the market will probably break to the overall prevalent direction of the market, which we have identified as bearish pressure. So the fact that we might see more downside pressure in this market could easily be the way that unfolds. Now, in terms of the fundamentals, the belief is that as long as this shutdown is short-lived at best, and we're talking about only up till the 17th, because all bets are off if they run into any kind of a stalemate where it starts to affect our treasuries, our bonds, because that right now is considered to be the golden benchmark that is world renowned. That's the stability of the world, is our treasuries. Mess with that, you're messing with a global economy. I don't think it will get there, but that's the only thing, and that's, as I said, off till about the 17th. We're looking at a shorter term chart, 480-minute chart, continuous contract off the gold COMEX contract. And this really allows us to see these series of lows and where support might fall in. 76, and it's simply from where I'm marking the top to the bottom. We know it's a band between 76 and 78. You can see that the low is just above that. We can also see these series of lows that have touched upon it. We looked at that on our daily and weekly chart. But when I look at the market in this way, and the fact that we're currently trading really within this band, this range right here, my sense is that I wouldn't even attempt to look for any kind of support until we saw it bottom around here. In other words, for it to just bounce off of this point and to trade back higher without really dynamic fundamental news that would change the overall outlook, current outlook of the precious metals markets. I do see continuing weakness, and we'll look to see if a base can be built here. If not, we talked about the next level, and that's at around 1245. I've just pulled up our daily chart. This has our most current Elliott wave count, and yes, with these most recent price drops, the bear count seems to be the only count that can hold any kind of validity. If that is the case, this is what we're looking at. This entire last rally was all part and parcel of a wave 3. It's a corrective wave that was composed, I believe, at this point of an A, a B, and a C. From that point, we went into our fifth wave, wave 5, on a bear count. Right now, we probably have something like a 1, 2. This is going to be 3. We'll get a 4, and then a final 5. Where will that 5 conclude? That's something we'll talk about in the upcoming shows. But for right now, the key level to watch in gold pricing is, call it 1272 to 1275. In that area, it's that 61% retracement. We have flirted with this area. We have not actually reached or taken it out. And therefore, we really want to see if the market continues under pressure, if in fact it will find any kind of support here. If in fact it does, what we would look for is maybe a clip up for the final count, the 1, 2, 3, 4, and then our fifth in terms of our sub count for this current wave 5. So what about silver? Well, over the last couple of days, absolutely, we have identified an area of support that we felt was below $21. 23% retracement is $20.45. On this daily chart, we'll pull up a shorter term chart if time permits, but you can see $20.45, one level, 38% is $21.35. It did in fact move and trade down to this area. You can see it by the virtue of this low, but is effectively trading right now at 21.17, just below this 38% retracement level. That's going to be our resistance. Very, very short term, that's going to be our support. However, I am looking for it to follow gold, and if we see a continuation of gold prices going lower, we'll probably see the same in silver. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. What a day. Bye-bye.